Sivaraman, good morning. First, if you could confirm that the block deal that took place today is in fact that deal, that placing of stake to Bain Capital?
From Bain's perspective, we do believe that they've taken additional exposure. I think that will that's something which they have, in addition to the 5% that they've taken as a primary issuer.
Okay.
They have another exposure.
Okay. If you could confirm the price for us, because the exchange data is showing 68, but when we speak to bankers, the price that we're getting is 70 rupees.
Yeah, it's around the range at which they've bought. I think if you look at that, the volume at that point of time, it will indicate you the price. Really, it's a transaction that happened between L&T and Bain Capital.
Okay. So, Mr. Sivaraman, Bain's entire holding post the entire preferential share issue as well as the warrants would then come to over 10%?
Yes, it's around 10%.
Okay. Can you tell us, in terms of the 700 crores that L&T Finance Holdings is directly getting from Bain, how exactly is the capital going to be used? What will your capital adequacy ratio now look like?
See, at the operating entity level, our capital adequacy is at the level of about 14.5%. Plus, we do have some liquidity at the holding company level. Right. So this will actually add about roughly 2% to the overall capital adequacy level.
How long would it suffice your capital adequacy needs for then? And for example, can we see much more equity dilution, or would this be it for some time?
Well, with this raise, along with other flexibility that we have already put in place, and the company's balance sheet should take care of us till end of March 17 or so, unless the growth rate really shoots quite significantly.
So no further fundraising, or would that be dynamic process and you could relook at it maybe in next 6 months to 1 year? No, the next 6 months, 1 year, I think it's a fairly significant number, and as you are aware, this warrant will be exercised over an 18-month period.
Okay.
So any dilution during this period will not be appropriate unless these warrants are exercised.
Okay, and from L&T's point of view, are they looking to sell further stake?
See, I think overall, as a strategy, L&T would look to see how to enable the holding company to raise capital for itself.
Okay.
So I think it's a piece of it's a strategy, a tactical call that L&T could take from time to time, depending on how things are. I think as we have always been maintaining, there's a need for a shareholding structure of L&T Finance Holding to really get more robust with more institutional investors.
Okay.
Right. While primary could be one route to really make that happen, the other option is also for L&T to participate in secondary, while retaining a substantial interest in the company.
Okay. So post this,
there is no such target plan as to this is the dilution that L&T would like to do. It's something which is event-based.
But they would continue to be the majority promoters eventually. I know it's only around 67% in terms of what their holding would be post today's 5% transaction. But in terms of a comfortable holding that L&T would like in L&T Finance Holdings, how much would that be?
Well, it's not appropriate for me to make a response to that, definitely. But I think L&T will be a very, very large shareholder, even about 15% for a period of time, because after the complete conversion of the warrants, L&T shareholding will drop to about 62%, which is still 12% above the 50% level. So I think there's a long way to go before L&T can be that.
So you are hinting that L&T would be fine with another 10 to 11% dilution, maybe not in the near future, but over a reasonably long period.
First, I'm hinting nothing. I'm only indicating to you that even as we raise capital, there is a good distance for L&T to travel before it will happen to be 50%.
Okay. So, one of the reasons why a lot of analysts were anticipating around 1,000 crores of additional fundraising for L&T Finance Holdings, besides the 610 crores that you'll raise via non-convertible preferential shares recently, is because you'll have aggressive growth targets of over 20% in the next 3 years. Can you just highlight what sort of credit growth are you recording at this point in time, and what kind of targets internally might you be working with?
See, we don't talk about targets because then it puts a lot of compulsion on us. We look at it as what are the opportunities available for us to grow and make sure that we get our act together to achieve those kind of outcomes. So I think if one were to believe that next year is going to be one of the takeoff years for the Indian economy, followed by at least 2 more years of strong capital expenditure in the country, it will offer us to grow the balance sheet anywhere between 25 to 30% over the next 2 years. While this year could be a little subdued because the recovery doesn't seem to be in place at this point of time. So clearly, a balance sheet which will grow at about a CAGR of 20-22% in the next 3 years is on the cards.
Okay.
So that's the basis of planning out this kind of capital raise, and we have taken care to ensure that this capital raise is not all upfront. Capital is available on call, and we are able to use it as the asset growth happens on that.
Okay. In terms of disbursement growth right now, Mr. Sivaraman, can you apprise us of where you're seeing incremental lending happening, which you're most comfortable with in terms of gross NPLs as well? Say, for example, infra financing, etc.
Yeah, as we said at the closing of the last year's financials, we have continued to focus on operational assets in the infrastructure sector, in addition to renewable energy as another interesting opportunity for us. On the retail segment, clearly the housing as well as the microfinance segment have been showing strong growth. So these are the 4 clear focus areas for us around which we have built our plans for the current year. Given the monsoon situation as well as the economic cycle, the CV, CE as well as the tractor segment do seem to be a little quite muted in its growth. So consequently, the opportunity over there is limited. So these are the 4 areas, and we do believe that the current year, the retail book should be able to grow around 15%, and the wholesale book in the region of about, say, 25% or so, given that the disbursements are lumpy.
Okay. One of the triggers for L&T Finance Holdings, sir, just one quick last question, is the likelihood of maybe converting into a bank at some point in time. Any plans on the organic or inorganic front that we can expect that you might be working on?
It's our desire, definitely convert ourselves into a bank over a period of time, because we do see that as a value-adding opportunity, and also making sure that our growth platform is more robust. Right? But there are no guidelines for grant of a universal license to a large player like ourselves. While we can continue to evaluate an opportunity around the inorganic road, it also subject to regulatory dispensation. So we'll continue to look at it very, very, very keenly and then await an opportunity to achieve that outcome.
Okay, your infrastructure finance unit recently cut interest rates, Mr. Sivaraman. We have the next policy now coming up next Tuesday. Do you get a sense that if there is a rate cut from RBI, we could see further transmission in interest rates?
Well, we have this cut is on the back of the cost reduction that we have experienced in the last about 3 quarters or so, what we believe can be sustained in the near future. The market borrowing costs have more or less discounted a certain level of rate situation in the next 2 to 3 quarters. So I'm not sure whether it will be just linked to the rate cut alone on by the regulator. Let's see how the others also react. That will also give us an indication of how they look at the rate moving in the next 2 to 3 quarters. We'll take a view about it.
Okay. All right. Fair enough, Mr. Sivaraman. We're going to let you go on that note. Thank you very much for joining in and talking to us. So that is L&T Finance Holdings also confirming that large trade of around 8.6 crore shares that took place where L&T was in fact the seller, and importantly Bain Capital was the buyer. So Bain Capital, the PE fund, will now hold over 10% stake entirely in L&T Finance Holdings post the deal, which is worth around 700 crores that was announced today as well. Important news coming in. Time for a break now, but we're going to get talking on the commodity strategies, or rather, commodity strategies lined up with T. Gyanashekhar on the other side.